Hello, everybody. Welcome to another episode of Snakes and Ladders. How are we?
Good.
Couldn't be better now. Stop raining.
Couldn't be better.
Well, you've got a fabulous new jacket, Jimmy Lee. Tell us a little bit about your drip, as the kids call it.
That's very good, Ben. You can tell you used to live in Walthamstow. This is from a brand called, I think it's pronounced Fera or Fera, F-E-R-A, and it is their ratting jacket, which I sort of thought largely summarises how I feel about my life most days. So, yeah.
You got a particular problem with rodents at the moment, Jimmy? Or
no, I mean, apart from the sort of general everyday ones I have to deal with, no.
Well, you look absolutely marvellous. Thank you for sharing this gift with us and with our viewers.
Okay.
I'm actually a lot more happy than I should be because I won't go there, actually. I better not go there.
Oh, he nearly gave it away.
I nearly gave it away, but no. Okay, let me start that again.
You're not starting that again. That's staying in. Just cruise on through. What's next, Benny boy? Not letting you off that lightly.
So the year has started very well, not only for all of us, but also for the markets, I believe. So shall we get into it, lads?
Yeah, I mean, it feels like business as usual. Everything is up.
Unbelievably.
It's kind of astonishing, really.
It's astonishing. It will not be put down.
And so this week was kind of, especially in the US, was the first big test, as you had TSMC came out with their numbers, which is essentially a real barometer into how the AI trade is doing. And then you had most of the large financial institutions, so BlackRock, Goldman Sachs, JP Morgan, all reported this week. And I mean, yeah, the numbers it was just an absolute blowout. I think ASML, which is the lithographic chip manufacturer, or their machines basically help with the creation of chips.
Yeah.
I think their shares are up 25% this year after being up 40% last year. TSMC's up another double-digit percentages, and we're on the 16th of January for the year. Goldman Sachs basically said we've had our best ever trading period for Q4. BlackRock's now got $14 trillion assets under management.
Do you not
it's
think
just
that?
yeah.
That
I mean,
feels
every
flag. That's a large concentration of wealth, right? It's a sort of thing where you reflect on that and you go, well, once that much is in one place, the one spook or the thing that the trigger that moment, the waterfall effect could be so much faster and more powerful. I don't know. I may be reading too much into that, but I thought 14 trillion in BlackRock alone. That's a major concentration of cash.
But you have to remember that I think it's in the last 18 months they've bought a lot of either private infrastructure-focused investment companies or private wealth, or they've bolted on a load of stuff. So it's actually not just organic growth of their equities and iShares platforms. They've actually bought on a load. I think GIP Partners alone was in the tens of billions. So it could be that, but no, I agree. I mean, every single day I see the share prices go up, and you just think this has to end at some point.
Well, also, I suppose it's and it hits with the Mag 7 that then became the Mag 5, and then the fact that this concentration feels a little dangerous generally. I would say that's an observation I feel socially as well as economically, that we seem to be getting. So a few sort of anecdotal examples: farming. Obviously, there was the big piece about tax on farms, but generally, therefore, the only way to be profitable is to be a big corporate farmer and own lots of them. Houses, squeezing private landlords out, so therefore we're just going to have big corporates owning lots of housing. There's a sort of a recipe there that we're seeing, and this is the most extreme version of it. But if you look at what AI has done, okay, one or two big hitters, but mostly the beneficiaries have been the incumbent big tech, and the same you would suggest therefore of BlackRock. And you go, just as a story, we feel like we're reaching massive oligopoly at most, but peak levels. I don't know. I don't know whether that is inherently bad. My predisposed logic is to go, bad, but I haven't really scrutinized how lethal it could be or otherwise. It just sort of doesn't feel comfortable, does it? That's an incredible. I hear you. It's not just people giving them money, but to be in charge of that kind of cash in a single organization, I don't know.
It's really how long can the music keep playing? Because then you've also had commodities. So gold's up another 5% this year. Silver's up nearly 20%.
Nearly 20%.
Copper's up 5%. And this is all on the back of huge returns in 2025. and so and even we haven't even got to crypto yet. Crypto is quietly having a good start to the
Not
year,
quite
with
enough, but
Bitcoin
yeah,
up
it's getting there.
12%, ETH up 6%, and we haven't even so the market isn't even looking at
I've
that
got to
right
say, I
now.
thought that one
But
was
there
still a
will come a point
surprise.
when
Did you not?
Hmm.
I maybe didn't see that coming back as quickly or as strong. I mean, I saw it do a little blip up and I thought, and then I woke up the next day and went, right, okay, it's rallied. And then I
Well,
thought, oh, it's going to fuck right off. You
yeah,
know,
well, hang on, coming back, it's slowly crept up. I wouldn't say it's coming. I
it's
wouldn't
gone
say
a
it was.
lot higher, more. Well, I suppose it's sat there for longer than I thought. Generally, I just observed we might be seeing a blip. I was ready for
A bigger dip, so
and a
it's more
continued
that
dip.
stabilized
Maybe
quick.
that's it.
Yeah,
Yeah.
I would agree with that for sure. And if I was to give you what is my want on this, the vibes check. What I'm hearing, through various media channels, is people saying, "Well, we are in a bubble, but nothing's going to burst this year," which makes me think when you start hearing stuff like that, it's going to burst this year. People start getting sort of overly confident, and people think they can sort of ride this horse for another year. I'm starting to get a bit worried, I suppose.
Mm. Yeah,
yeah,
interesting. Yeah.
and I think especially in some of this in things like gold, I mean, the statistics are now coming through, and because of where the price is, the central banks aren't buying, the jewelers aren't buying, everyone's slowing down because they're actually they can't really afford to justify. Jeweler buying gold at this price they're not going to be able to justify passing on all the cost onto their clients if they
Yeah, for
make a
sure.
nice ring out of it. So they're kind of going, actually, you know what, we'll just use some old stock, or we'll try use some other materials. So then when that slows down, it's literally just speculators piling in and hoping that it keeps going higher. And you go, yeah, I mean, maybe it does keep going for another 2 years, or maybe it doesn't.
Everyone's sort of predicting that this is going to be this extended Indian summer for stocks before everything pops. But I don't know. I think when people start talking about it, I start talking about that bullishly. I suppose I start to get concerned.
Yeah, I don't know. I mean, I actually can see the
Yeah.
case for that. If you think about the tangible gains in efficiency that AI is offering at the moment, I think businesses could see a continued boost for a little bit before it really
How
comes
much
through.
say would like the Anthropic IPO then decide that? If the
Mm.
Anthropic, I mean, you would expect. I suppose everyone would expect the IPO to go completely wild on the first day. But if there's a sort of big retreat from that, is that the sort of
Yeah,
event that
come
could
on.
spark?
If there's anything other than a bonanza at that point, I think you've got to assume everybody goes, "Oh, okay, shit."
Yeah.
Certainly, that's how we would respond. I'd have thought. I suppose there's something also interesting, and this is maybe a counterpoint to BlackRock having so much under management. But all of this behaviour, if you think about it as a sort of big picture, is maybe the downside to what we still promote, by the way, of having so much more retail investor exposure in these markets, that they are not as steady a hands, that they're like to that point, central banks not buying gold, so it's left with speculators, that there are people hoping and maybe. Yeah, I don't know that there's definitely a
Yeah,
narrative in
interesting.
there that we're seeing a more extreme swing, a bigger hit of hopium in most of the stats that we're looking at here. And I'm sure that is not a precedent that's never been set before. I'm sure we've seen that in past markets, but it does feel like that, right? Whereas the cautious institutions and if you go all the way up to may he enjoy his surely not very long retirement, Warren Buffett level, sat on cash, waiting, doesn't think anything's good value, apart from maybe the London Stock Exchange. Hint, hint for later. A decent metaphor for this is that one of the problems, my family's background, we're all in various parts of property. One of the things that Dad always used to say is actually hated it when you had a really strong market, because you had to compete with every dickhead who thought they could be a developer, right? Because they couldn't really lose anymore. It just kept going up, kept going up. So they would overbid, pay far too much for sites because they weren't really experienced professionals. When the cream came off that and they all ran away again, it was a great moment for the pros to actually buy good sites at the right prices, etc. It sort of feels like we might be having a bit of that. Everyone's like, "Oh, I can't lose. It just keeps going up." Da, da, da. And then when the cream comes off, you can imagine that the exodus will be nigh on panic, right? And in the retail investor, there'll be a lack of faith that, oh, well, in 5 years it comes good, or that whole slightly more measured long term view is lacking, which would be the worry.
God, that could be end of days, really, couldn't it?
Well, no, that's the good news. Give it 5 years, but
Well,
it could be a
at
crap
least
year.
at the beginning, I know what you mean. It's just the swings become so much
Yeah, more
more
volatility. Look, it's not as extreme, but it's kind of that narrative of, as crypto has become a risk-on play for the market, but also the market's become a bit it's almost assumed a bit of the crypto approach, that slightly meme coiny feeling. It's happened a few times now, hasn't it?
And, I suppose we are also in the midst of an M&A, sort of bonanza too, right, Jimmy?
Yeah, I mean, I think you saw, especially with Goldman Sachs's and JP Morgan and Morgan Stanley's property for the year ahead. I mean, they already made a huge amount of revenue
Yeah,
from M&A in 2025. They're basically saying that revenue in 2026 from M&A and investment banking fees will be even
for
higher.
sure.
And you can see that in the London markets over the last 10 days, the kind of mooted mega merger between Rio Tinto and Glencore, which a lot of which a lot of people are kind of putting down to this huge hysteria over copper and people just wanting basically copper deposits at all costs. And also, we saw this week Oxford Biomedica putting out a statement that they've received a number of unsolicited proposals from EQT, which is a huge private equity firm. But
Did
basically, we're
we
kind of
see
saying that
anything
actually
there?
a lot of these companies.
Sorry, I'm curious to get your take on that. I think these are two really quite different narratives. I appreciate they come to the same outcome. To me, if you're getting unsolicited approaches, doesn't that mean people think you're undervalued? Isn't there they go, oh, lovely.
Yeah,
Whereas Rio Glencore feels like an incredibly complicated deal to achieve, and yet we're all really excited about it. It's sort of, I don't know. I was curious what you thought about that.
I would say the past 18 months, I don't know the exact numbers, but the amount of tape private off the
Mm,
London Stock Exchange by private equity firms, in particular American private equity firms, it's been far more than I can ever remember in sort of 15 years of being involved in the London capital markets, and that purely comes down to the fact that they are so
mm,
undervalued versus American um, peers, both listed and private. So it seems to make a lot of sense. So Hargreave Lansdown, the investment platform, was one of them. There's been a lot of them, even at a very large size. So I think it's really interesting at the
yeah. Yeah. Okay. Sorry, which led to M&A. Oh, and the obvious pun here, Jimmy, that M&A picked up when you stopped being an advisor in the market, buddy. So well done. Good. Good.
Yeah, exactly. They all decided that now that some useless operator had left the game, then it was all much better for them. No, but I think it is genuinely all to do with the fact that Trump has come in and he's kind of said to everyone, I am going to adopt a very different stance to the Biden administration. I would never have thought you'd have had this Netflix, Warner Brothers, Paramount scenario under Biden, because Biden was very much so the view of anti-competition. I want to break up Google, whereas under Trump, you feel like actually that narrative has changed a lot.
Yeah. Agreed.
So, early signs of that, we are heading up this year, certainly on the US side, and I'd say, precious metals, minerals. But what does that mean for something that's very close to our heart? What does it mean for the London Stock Exchange and what's happening in this country? What do we think is the outlook?
Yes,
Is there going to be some um, downriver sort of pickup in the LSE?
yeah. I mean, I think the question for the week, really, and for the year is this the year that the London stock market comes roaring back? Especially based on the fact that last year, I think the FTSE 100 was up nearly
Mm,
20%. It's already started up the year 3%. The FTSE 250 is already up 3.5%. And you ask yourself the question, why is that when historically people have said, well, London doesn't have any of the big tech names, it doesn't have a Google or an Amazon or an Apple. But in actual fact, the momentum trade of what is popular at the minute, i.e., your commodities, financials, defense, industrials, those sorts of businesses, couldn't be in higher demand at the minute than, I mean, they're probably in the highest demand they've been since 2008 or before. So unsurprisingly, everything's gone up, but also valuation. If you compare the US financials versus the UK financials, or the US copper miners versus the UK copper miners, there's still at a valuation side of things, they're looking pretty good buys. And then you have the dollar discount because the dollar's come off a lot in value versus the pound since Trump took over. So there's a huge amount of reasons. And more fundamentally, there's a lot of really great businesses listed on the London Stock Exchange. And perhaps now with everyone sat there going, oh God, Apple at like 30 PE, at an 8% growth rate, maybe I shouldn't be putting my money into that. Maybe something trading at 11 to 12 times PE that's got a lot of cash flow that's on the long. So maybe that's a bit
Yeah,
more
well,
interesting now.
sorry, I was just saying people were predicting at the beginning of last year that there might be some outflows from the US markets into European ones, obviously London being one of those big markets. It feels like that is going to happen this year. It's just happened a little bit later than maybe some people last year were predicting.
Well, I think we saw some of it last year, right? 20% spike in the
Yeah, okay, fair,
C.
yeah.
I think there's a couple of things here. Firstly, 20% of what? The percentages are always dangerous. You have to think of the original number. The thing that's pretty phenomenal about the American growth is it's the compound effect of their growth over a while. I would, but fundamentally, to the earlier point, if you're a value investor in your approach, the London Stock Exchange, it's like one of the best places to be investing. I think the businesses are good. I think we've spoken about this before, but the UK has a perception and a narrative problem, in our opinion. There was an interesting article even from the chief of police about actual real crime in London has never been lower. The murder rate has never been lower. At the same time, we've had a conversation on this podcast about feeling unsafe at a very petty crime level. So you have to acknowledge that there's the petty crime versus the serious. And actually, it's nice to hear. I made myself just take a step and go, okay, I have to acknowledge this. That's actually fundamental. You're not the fact that your life is in less danger than ever is a good thing. So it does still feel like that narrative problem hasn't quite gone away. But this is the sort of news that makes people go, hang on, well, why have I written London off? Just a sec. I'm looking at American stocks and they all, to Jimmy's point, look really quite expensive. And in order to buy this, I've really got to have a high conviction that this AI thing isn't a bubble. If you think it's just going to be flat, you wouldn't be buying American stocks. You could only be buying at this rate if you believe growth is there. We've still got big headroom for growth. Whereas in London, you just don't have to think that. You can get dividends. You can get really high quality, interesting businesses in different sectors. They're not so tech focused. Yeah, and lots of fantastically well run, well managed companies. So I think I hope so. Feels like it'd be a good year.
I think there's also, and we don't do politics on here, but I think also you can't underestimate the impact globally of what Trump's move on Venezuela will have done to the leaders of other countries, because most of them all are huge investors in the American government bond market. They're all huge investors in companies that are stock exchange listed. And for a second there, they might just think, do you know what? If the president of the United States is happy to tread on another nation's sovereign soil and helicopter out the leader and put him on trial, maybe we shouldn't be as tied to the hip as we are at the minute to the dollar system. And maybe it's better to be investing in UK government bonds or the Spanish stock market. Or I just think there could be geopolitically a bit of that going on as well.
Just a little seed of an idea on top of that, which would be America's sort of tech dominance, our use of American tech platforms. As it stands right now, is going nowhere but up. But the more that I use these AI tools day to day, the more you start to realize that we're not far from like, oh, Google Mail, I'll just build my own. Oh, this, I'll just build my own. It's just plausible that our reliance on those big platforms is going to get absolutely hammered by our ability to create stuff. At which point you could suddenly see a whole bunch of European-based initiatives and companies taking some of that share back away from Amazon. And to your point, I guess that it probably is still linked to the dollar as the reserve currency piece. I think those two things, although behaviorally very separate, I think they do actually overlap. But yeah, you absolutely could see, Jimmy, from the top down, people go, oh, I'm not sure about that, and then you make a different corporate decision because you go, well, actually, if Donald Trump is willing to do that, then even having all of my data, etc., with Google, I should be considering. And do we trust the whole ripple of trust could fall down there? But also, I would say the barrier, the key thing has always been how easy is it to move, right? The equivalent of liquidity here. But once you're entrenched in technology or a platform for the last decade, you really were, right? People who, once you've learned it, you stick with it. And that means why Microsoft has done so well, I would argue, because Microsoft Word is arguably not really a very impressive platform anymore. But once you learn
Microsoft Word is absolutely fucking hideous. It's one of the worst, if not the worst, app that's ever been created.
And yet, hugely dominant because we're all creatures of habit. As soon as AI
Yeah.
goes, oh, you want to swap from there to there? Well, I'll just manage it for you in the background. Been playing with Claude Cowork this week. I'm sure lots of people have. He could go into my filing system for me, rename, reorganize, sort out. So not a big step then to say, oh, by the way, I'd like to move from Google to EU Drive, insert company here, and it goes, oh sure, give me an hour or two, I'll set these up, I'll compress them, I'll move them over, then I'll uncompress them, I'll rename them, and you'll have moved. And suddenly a job that would have felt just insurmountable, you'd need a whole back office IT team, is just being done for you, and then the barriers come down. It's my big radical idea, but
Yeah.
It's the idea that we've been talking about a bit. It's sort of an offshoot of there won't be any apps anymore. There's just going to be one interface, right?
Yeah, I think I said. Yeah, I don't know what you guys think of this. I know we're gently off here, but I do think it gives a real opportunity to European and UK businesses. I really do. I think this whole moment gives a fresh injection of opportunity. It feels like a central database will be the company's asset, and then you'll plug in using MCP to specialists.
Yeah.
So I've been helping a friend this week who's been devising a cash flow related tool and wanted to talk about my experience, etc., etc. And immediately I was like, well, this is basically a specialist, very well trained and contained AI model that you would plug into. But I'd need to really nail this, you'd want the company's data in a database first. I could see that happening, and then you have specialist bits coming off it, which I suppose is sort of like we're still subscribing to software, Ben. It's just,
I don't know. When we've been thinking about this before, I'm not even sure how that transition happens. It's obviously slowly, but I don't know where the IP is. The IP is obviously in the data, but very difficult.
But but there you go. Owning your own data. I've already started thinking on our behalf how we're going to get our data into a database that therefore we could connect. So how can we get everything that the team are doing all day, every day, to be adding the useful parts of that? So every meeting, all the meeting notes go in, all the quotes. We're not a million miles away from that. And you're absolutely right. You owning your own data in the middle of that will be key. And if you give it away to Google on the way, well, you're losing an edge.
Yeah, that will be the IP. If you can sort of fit any sort of satellite, AI, what I would call API, but you've got a newfangled name for it, sort of hovering around your data, then I don't know what those borders, those IP borders, the ownership of the sort of of that data, as well as the things that link to it. I don't even know what that ecosystem looks like.
No. Well, there you go.
Well, actually, before we go on, we obviously all have want the London stock market to have its time in the sun, and we want it to sort of come roaring, into headlines this year. One way of that, or one way, always sort of brings it into the general news cycle, is IPOs. Just wondering if there's been any sort of whiff of some interesting IPOs that might sort of launch it, certainly from a commerce point of view.
Yeah, I mean, there's a number of names that have been touted. Shein, the
Shein.
clothing company,
they've been taken back to China now.
Shein
They just can't seem to
one.
make that work, can they? Because they need the CCP's bloody permission, even though they're not a Chinese company.
The big one, which was mooted last year, is Visma, which is the HG-backed software group. Zilch is another one, which is buy now, pay later. Howden, the very large employee-owned insurance group. Starling Bank. Revolut's meant to be looking at it as well.
Revolut will never do it. They'll go to
a
America.
lot of different companies being flown around.
No way he'll give Revolut to the UK market.
Yeah, I think
Starling,
why
I
not?
could believe.
Elaborate, please, buddy.
Why not?
By the way, Revolut's my new favorite thing in the world. I was actually looking at getting Revolut merch. That's how much of a fucking loser I am.
What?
I'm completely obsessed with it.
Jesus, I didn't know what I started when I suggested you do that.
There we go. What a subtle way of going. That was me.
That was, but now you're buying merch. I regret it. I could see Starling. I'd be really excited about Starling IPO. I think Starling is still a grown-up, more trustable Revolut. I still worry, I think, about, there's been a few articles about debanking. It feels like the sort of thing Revolut would do, and they fly a bit close to the sun sometimes. Why? Because I think he just totally would absolutely want to be seen as a big tech, an American big tech, and the home of that is still there. I think that's just the whole internal perception from the founder and the way they've tried to build their company. They want to be a Google and Apple. And by the way, execution is 99% of this, not the idea, and they are stunning. I agree with you, Ben. The app is fantastic. The features they've rolled out, they've so clearly, intelligently understood what was annoying before and worked out how to unlock it. And there will have been so many barriers behind the scenes to that, I'm sure, that we don't even know about, from regulatory, etc. So it's a super impressive ecosystem, but I think it's much, I don't know, it's a perception of the whole way they've built their business, but it just feels like they would want to be a US tech stock.
The IPOs are, of course, one way of getting a bit of sort of sexiness in the stock market, but I think it also comes down to the fact that the UK economy, the signals being published, suggest that it is actually performing an awful lot better than perhaps the media and or the sort of political sphere would have you believe. Interest rates have been coming down. Traders are betting there's going to be another 25-point cut before June. Consumer spending was on the high over Christmas, as demonstrated by Next, Tesco, Sainsbury's, all with good numbers. Our UK borrowing costs have fallen to the lowest level in more than a year. There's just a lot of generally quite positive consumer news. And that coupled with, there was a nice article this morning talking about mortgage rates and the likes of the high street banks really competing now for people, because a lot of the potential buyers slowed down pre-budget, thinking, "Oh, I'll just wait and see what's going to happen." The budget was less scary than people thought. Now, all of a sudden, the banks have gone, if they're going to buy, they're going to buy in the next couple of months. So let's make it really competitive. So if you've got a 40% deposit, you can get pretty close to 3.6% as your borrowing rate. So if you get the house market moving, but then also the government reducing the amount of cash you can put into your cash ISA every year means if you've got money lying around, you're more likely to put it into a stocks and shares ISA. So there's lots of reasons I think people should have to be positive about the UK more broadly. But we do a very good job in this country of talking ourselves down and kind of speaking into this doom loop, whereas I don't think that's really the case.
No, I think, if anything, I think this country and London stock market needs a sort of a communications hero, really, someone to really talk about the positives, and really sort of promote some of the fun things that are happening in the London Stock Exchange. Okay, well, that's all I've got this week. Thank you very much, lads.
Thank you. We got a spectacular delay with Jimmy.
Thanks, everyone.
He's looking great.
Can I just say, I know exactly what it is. It's because my headphones, I put them on, I had 10% charge, and now they're at the lowest bit of the battery, so it's just cutting in and out.
Well, okay.
On that spectacular finish, from a man with 14 headphones to a man who can't keep one pair charged.
Lots of love, everyone. See you next week.
Yeah.
Mwah.